Welcome to the Full Tracy Money Audio Commentary. This is Owen Tracy recording. It is 3:41 p.m. That is Central Time. Today is March 19th, and we had the Fed funds rate decision today. It did not move, but I think most people were looking at what was going to happen with quantitative tightening, and we did have some movement on that. So they are reducing the runoff of the treasuries down to about 5 billion a month, and not touching the runoff of mortgages. And then when we got to the press conference, what Jerome Powell had to say about that was rather interesting, and I think this was the primary reason why stocks popped on the upside along with Bitcoin, Ethereum, gold, and also a strong performance from bonds today. What he said was that they want to get rid of their mortgage portfolio. Now, that is still in excess of $2 trillion worth of mortgages, and that the pace with which they are doing the runoff is unlikely to change. And then he went on to say that in the event that the size of the Fed's balance sheet wants to stay stable, that they would compensate for the runoff of mortgages with additional purchases of treasuries. So on aggregate, it would not result in quantitative easing, but in practice, it would be a support for prices. And that is the reason why the 2-year yield was lower today by 6 basis points. Now we're at the lower side of this range that's been forming for the last almost 2.5 years. And there's been a succession of lower rally highs since the peak in 2023. And it has encountered resistance in the region of the 200-day moving average. Now we have also seen that it has found support in the region of the 1,000-day moving average. So I think we're at a significant point of indecision here by the bond market, because either interest rates are going to go down from here or they're going up. And then let's think about what else is going on. Well, we've had a lot of questioning around the inflationary potential for interest rates, or excuse me, the inflationary potential for tariffs and the impact it would have on interest rates. And what the Fed has basically started to bring back